Hello, guys. This is Ola Ibiwoye of Commercial Property Club podcast. Once again, it's another episode of our pod chapter in which we dive into the knowledge-based income-producing property. We specialize in bringing valuable information, knowledge in terms of income-producing properties like apartments, senior living, retail, warehouses, as well as medical buildings. And we don't fail to bring in experts and professionals that are actually participating in these industries, people that are doing it either on the service side or as well as in the investor side. Today, I have with me somebody that is seasoned when it comes to an investor, particularly in the multifamily aspect of man, which is your apartment. He's a syndicator as well as an operator also too in this aspect. Before I bring him on board formally, I would like to introduce his biography to you today. Jade Laye is his name, is the CEO, the founder of Laye Investments. Like I said, he's an operator, also a syndicator. And really, his background is as a lawyer who helps investors achieve financial independence in this aspect of, I would say, yeah, that's another feather he carries as an apartment investor. He has over a decade experience in the acquisition, rehabbing of apartment and also operating them. Right now, he has well over 3,000 units of apartment in markets spread across the United States, markets like Tennessee, Georgia, Arkansas, and also too in Texas. And these are stronger apartment markets that are out there. Jade is also a partner in intellectual property practice group of Ains and Bone LLP. That's in Houston area as a registered patent attorney with them. Jade focuses on practice on intellectual property laws, emphasis based on patent of opinions and counsels, as well as acquisition, licensing, also to several other patent rights right there also too. He has litigation experience also too, supporting patent infringements and invalidity also too. Jade's past patent examination experience gives him and his client a significant advantage in both prosecution aspect of things as also a litigation aspect of things also too. He has vast experience. He has experience on the division of telecommunication. He was also with the United States Patent Trademark offices, in which he deliberated in several aspects of their department. Jade is involved in the aspect of I'm talking about the attorney aspect of things right now with Ains and Bones. He's done so many vast attorney experience in that line. He is also in leadership aspect of things also too. So, but without further delay, I would formally introduce my good friend Jade Laye of Laye Investments. Come on board.
Thank you for having me, brother.
Awesome. It's good to have you here today to share your valuable experience in the aspect of multifamily. I would always start with these questions with my guest. Mm-hmm. How did it all start, Jade? How did you start it?
How did it all start? Well,
being a lawyer, how did a lawyer acquire over 3,000 units of apartment using real estate syndication? We want to know.
well, it kind of all started with, two ways. Mm-hmm. Okay, it initially started, this was probably 12 years ago. Mm-hmm. This was just shortly after the housing crash of 2008. And we were trying to sell a house at the time, my wife and I, and the housing market crashed and we couldn't sell the house. And so I was forced to become a landlord. And so I had to rent out my house. And so at that time, I didn't know anything about real estate, really didn't want anything to do with it, but I was forced into it. And so,
Wow.
I believe as a man of faith that, God has a plan for all of us. And so,
True.
Around that same time, my father introduced me to the book, Rich Dad, Poor Dad.
Mm.
And so all of this just happened around that same period of time where that started my financial education. And so, from there, once I discovered the power of real estate and, approaching, viewing money from the standpoint of having your money work for you instead of you working for your money, then that just changed everything. So that was where it started at. And then probably a few years after that is when I learned another valuable lesson that, a career, a job, it's great to have. And of course, if we're able to, we should all be well educated and pursue careers, but just know that, unless you own a business, if you're an employee, even if you're a very well paid employee, you're still an employee, and that can be, that job can be taken away.
Yeah.
And so I learned that lesson around 2012 when the economy in Houston really got bad and even large law firms were starting to lay off. Just well educated, lawyers. And so that was a wake up call. It's like, wow. So your job is not as secure as you may think it is, even if you are very well educated. And so even though, I never missed a paycheck and all of that, but it still taught me a very valuable lesson that I need to take control of my financial future, and I need to make sure I'm never in this position, and I never put my family in this position again. And so that really started my just drive to say, okay, well, I have to reach financial independence, and the vehicle I chose was real estate.
Real estate, awesome. So it was a sort of wake up call that moved you in that direction.
Yes.
And providence, just like you said, providence and fate just
absolutely
fell into place. Praise God. Wouldn't you look back now and say, Daddy, thank you so much?
Yes. Oh yes. I say all the time, my father has been probably the largest influence on my life. I always say if I ever write a book, the title will probably be The Two Books My Father Gave Me. And the first book he gave me was a Bible. And the second book he gave me was Rich Dad, Poor Dad. And so in those books, they fundamentally changed my life in very different ways. But so absolutely. I could spend the whole interview just talking about the influence my father had on.
Yeah, the importance of fathers in their son's life, very important. Don't worry, we'll have another podcast for that.
Oh, okay.
We'll talk about fatherhood. Practically, you just can't undermine the importance of fatherhood in all aspects of our lives, even in this aspect that we're talking about. It's a legacy that that should transfer to the next generation. So I know most of your travels, most of your experiences are in the syndication aspect of things. How did you get into apartment syndication?
Okay, well, I started out buying houses. Did that a while. Started a company where we just basically bought, held rental homes. Okay. And then we probably still own a little over 50 or so houses in just various markets. And, that was great. I mean, it generated good cash flow and all, but, it got to a point to where I said, well, wow, is there a way I can scale faster?
Okay.
And not have to do as much work, because it's all about leverage. I mean, leveraging your time, your money. And so eventually I was led into apartments because it provides more leverage. Okay.
Sure.
I can do more with less. And so that's what ultimately led me to apartments in 2015.
Awesome. So leverage was the driving force, which makes sense ultimately when you compare the economic aspect of things and also to the logistical aspect of things. If you have with those 50 buildings, I bet you have management companies all over the place. As regards to if you have that 50 unit in the same place, 50 houses in a 50-unit apartment, which is less easier to manage and supervise and stuff like that. Leverage makes sense, which makes sense. So how do you syndicate an apartment building for newbies that are listening to you right now?
Sure. Well, to kind of make it as concise as possible. Okay. First thing I did is that I joined a network of people that were already doing what I wanted to do. So, I wanted to syndicate large apartment deals. And when I say large, I'm saying 100 units or more. And so those deals take a lot of experience. It takes a lot of equity, things that I did not have. And so first thing I did is that I joined a larger network of people that were there to buy apartments, and they wanted to do what I wanted to do. And there were people in that group that had experience owning thousands of doors. And so I could actually look and see these people are doing what I want to do. That was the first thing I did. So I joined that group and I got active in the group as far as, attending the networking events. And, it's a number of groups like this in the country that, educate people on how to syndicate apartments.
Okay.
And so I joined that group and I got active. I mean, I learned the model, went through all the education, and I learned how to underwrite apartments, and I learned how to, meet the brokers that list all the large apartments and all of that. So it was an education, but it was also networking, and I mean meeting people. Multifamily, unlike single family, multifamily is very relationship driven. So, a lot of times if you want to do big things, then you need to do it with, a group of people. And so I learned that pretty early on, the importance and value of teamwork. And, so I joined the group, I got involved, and then through that, I was able to meet partners and meet investors, which gave me that foundation that I needed to first get into the business. Then once I started buying deals, and then, the first couple of deals, I mean, my investors were happy. And so they would refer other investors, and, over a period of time, your investor database grows, and then the amount of equity that you have access to grows. And then also my network of other operators that I know grew. And so even though I started out, I was doing my own deals, but then after maybe my second or third deal, I started partnering with other operators who had networks of investors. And so then we were able to partner and pool our equity together and buy larger and larger deals. See.
Awesome. It's a team sport.
Yes. It is a team sport. Yes.
You're bringing all the people on board, and that makes it people with complementary skill set actually that would actually make the whole cycle much more worthy to plow through. Yeah. So now being a professional as a lawyer, how do you manage to juggle your business, being a real estate investor, also being an attorney, how does that work?
Yeah, and people ask me that a lot. Well, not anyone that just has a job. It's hard to do if you have a job where you have to be at a desk a certain amount of time a day or have to be someplace. And so, the nature of a law practice, you just have more flexibility. And I mean, the time over the years, I mean, I've worked, at various law firms, and they've all been great firms, and they've just allowed me that flexibility to, have my real estate business, but then also practice law, and at this stage, I mean, I still enjoy the practice of law. It's a choice for me to practice now, so I don't have to, but I still enjoy it. And so I mean, every year or so, my wife and I, we reevaluate whether or not I'm gonna continue to practice. But as of now, I plan to continue practicing, but just maybe in a more limited capacity on the legal side of things. But me, I mean, I view it as everything. You should have multiple streams of income, because you just never know. Even now when trouble will come, and so when it does, maybe things are tighter in one stream of income, and so that stream may dry up or may not produce as much, and so you still have those other streams of income. And so I've just always approached money and a career and income like that. It's just better to have multiple streams of income. So I continue to do both things now.
Awesome. And it's good that the aspect of things, and the real estate aspect of things is can actually create multiple channels of income in terms of passive income. Now, in the aspect of syndication, I know you'll have to work with a lot of investors out there. In your experience, when it comes to working with maybe accredited as well as sophisticated, what do you prefer? What can you say as regards to both ends of things?
Yeah, I mean, I enjoy working with all types of investors, accredited, non-accredited. I think with investors, my general approach to just people and investors as well is, if you treat people the way you want to be treated, in general, that leads to good things. It's the golden rule. Okay. And so, I treat my investors, I treat their money as if it was my own. And so that just as naturally it's translated into, I've never had real issues with, relating to investors. Sometimes we do have to have difficult conversations, but, at the end of the day, my investors understand that in investing, nothing is guaranteed. It's all a risk, but of course we're taking calculated risks based on, data, market data, judgments, experience. And we've had very good success at that, but of course, nothing is guaranteed. And so I think if the investor syndicator relationship starts off there, and there's a general trust that, Jade is going to do the right thing by me, Okay, but that doesn't guarantee an outcome in any investment. But I know Jade is going to do the best he can to make an investment a success. Most people understand that, appreciate that, and that's really all you can ask. And so but I've never had issues as far as one or the other. They've all been great. The types of offerings that I do are 506B offerings, which I can take non-accredited to it. I really get a lot of enjoyment out of that because a lot of folks in the minority groups generally, at least in my experience, are not accredited. And so it gives them an opportunity to take part in these, private placement types of investments where typically a lot of our communities have not been given that opportunity. Okay. So it gives them an opportunity, it gives us an opportunity to grow our wealth and eventually become accredited, where then a lot more investment opportunities are available to us.
Yeah, absolutely. You hit it on right on the head as regards to sophisticated, at least, having some form of education when it comes to investment, not necessarily accredited. And that sometimes could prove even as regards to relationship, because on both sides, you still have to build relationships with both ends of things. And, having that one-on-one, just like you're right, it's all about integrity, knowing full well that, you said, Jade is going to do right by me. Yeah. That's good. That's good for investors to have a good feeling about you that you're going to do right by them. So now I know you've seasoned when it comes to the Texas market, particularly when we talk about the Houston area of things, the suburbs of Houston practically, because I know you've done quite a bit down there also too. What can you say about the Texas market right now?
Great question. Now, we're going through a correction in the market, with these interest rate increases. Interest rates have risen the fastest in any time in history over the last year, and so it's still sinking in now as far as, okay, what damage that has done to the economy, what damage it's done to real estate and small businesses. I think the full scope of the damage is yet to be seen. I think certain sectors of commercial real estate will suffer more than others. I think office space now, is still a falling knife. Given the longer term leases, a lot of tenants are still locked in leases that they signed prior to COVID and other things that, a lot of those leases are not going to renew, or they're going to renew at lower pricing and or less space needed. So I think we've yet to see the bottom there. As far as multifamily goes, as far as just the product, occupancies are still high. We're still getting good rent increases. The issue with multifamily now is just the debt. And, depending upon when properties were purchased, what type of debt you put on the property now, a lot of folks that either have maturities now or that have to buy rate caps and can't raise enough equity and all that, you're coming under stress now. So I think it's just a question of those groups that are able to weather the storm over the next, year, maybe 2 years, the ones that are able to get through that, I think you'll be fine long term. Now that's for the deals that you're currently in now. As far as if you're out there now looking for new opportunities in multifamily, I think it's a great time, because I think you'll find a lot of good opportunities here over the next, say, 6 months to a year. So, I'm still very bullish on multifamily, of course. So.
Yeah, awesome. The Texas market has really been the market the last numbers of years. I know that, and particularly in the four axis, the Houston market, the Dallas market, the Austin market, as well as the San Antonio, has just been quite, most especially in the Dallas area. So
yes,
deals are still out there. People are still very bullish, just like you rightly said. Now, I know you also, because recently I was looking at your most recent offering. You went to Arkansas.
yes, yes.
And I know, you've done Georgia before also. You've done Georgia also too. And, this particular market, Arkansas, Georgia and Tennessee, Memphis, but to be particular, markets like that, when you compare them to the Texas market, what do you have to say?
Yeah, well, all of them are different. I grew up in Arkansas, just outside of Memphis. And so,
okay.
If as long as you know a market,
okay,
you can find opportunities there. I mean, I say, I think there are a lot of great markets. It doesn't have to be a major, hot market like a Houston, Dallas, Austin, Atlanta. It doesn't have to be a market like that. I mean, because of course there's going to be a lot of competition. Those are going to be places where investors are always looking to put money at. So, those are great markets, but don't make the mistake of thinking that, okay, that those are the only markets you can make money in. No, I mean, if a smaller market, I bought properties in markets as small as, say, 20,000, 25,000. I mean, if you know the market and if you buy it right and you have good staff and operations, those can be some of your most profitable investments, And so, I mean, I've done better on some of the deals I bought in markets where you would never think to buy in, you probably avoid. Those have been some of my best investments. So, I'm of the approach that Arkansas is great if you know that market, or whatever state is fine if you know the market. So for me, Arkansas is a market that I know, and we're buying a property now in Northwest Arkansas. And if you know anything about the Northwest Arkansas area, that's the home of, Walmart headquarters, J.B. Hunt headquarters, Tyson's. It's one of the, top 8 fastest growing metro areas in the country now.
Okay.
And a lot of people, when they hear Arkansas, they would never think that. But of course, that's why it's important to know your markets, because you can find some hidden gems at times, and I believe we've found one in Northwest Arkansas. So very, very excited about that market.
Awesome. You talk about having a thorough based knowledge about markets in terms of job growth and population, and having a thorough understanding so that you can make an informed decision, just like you rightly said,
Yes.
That's good. So how do you get leads when it comes to investors? What kind of leads do you have in
leads
place?
as far as how do I find the properties, or
when you have investors come on board with you and partner with you, maybe on the GP
Sure.
side of things or on the LP side of things?
Sure. Well, all of that comes just through networking. I mean, I may meet investors at networking events, or I may have a podcast interview. I mean, on everyone, I give out my email address and encourage anybody, if they're interested, to email me, and we can set up a call. Or, I've done radio interviews. And so, I've just met people at events, and we get to talking, what do you do? And then, come to find out they're interested in investing in real estate. So, it just comes from talking to people, just networking in general. But pretty much my onboarding process is we normally start off with an email, schedule a call. It can be a Zoom call or just a telephone, and we get to know each other and what their investment objectives are, and from there you're added to my investor database. And when I have investment opportunities, I just email everyone, and we take it from there. So
awesome. So the value of the relationship can but be very important in the scope of things, in the cycle of things. You have to make sure you make that contact, that relation. Most especially, you're talking about the 506 B of things that you would use in syndication. That prior relationship has to be in place. Very important value add right now. So what makes sense now in apartment investing? What would you say makes sense? The class B and C of things, or the class A side of things? Because I know, in your portfolio too, you have a class A. But the one in Arkansas that's a class A, I believe.
Yes.
I think I saw it.
Yes, it was built in 21, so it's
the class A,
basically a new construction.
So what makes sense right now? The value add class B and C, or your typical class A?
Well, it's right now things are changing so fast in the market. What we thought a month ago or two ago, it's changing. So previously, what my approach was is just buying nicer apartments, because you had a lot of cap rate compression, where you were seeing the same cap rates for A class, B, and C class. And so I'll assume that your audience knows about cap rates and all this, so I won't take the time to go into it unless you ask me to. But
I mean, it's okay. Go on. It's part of your story. Yeah, that's okay.
Okay. And so basically, a cap rate is, to just simplify it, is that it's a representation of the expected yield on an investment. And so just to make it as easy and attainable as possible here in the short conversation, okay, if it's an A class apartment, I mean, it's a nicer apartment, you're not expecting to get as high of a yield, because your demographic, is better. They're easier to manage. They have good credit. It's a nice apartment, pretty, everything is new. Okay. But B class is not as nice. C class is really not as nice. And so the lower in class you get, is more risk in that investment. And so naturally you would want a higher yield on that investment, or a higher cap rate. See. And so what happened over the last 5 years is that you were starting to see basically the same cap rates for A, B, and C class. So it didn't make any sense over a period of time to buy C class properties, because it was so much harder to manage those. It's like, well, hey, if I can get the same yield in an A class property, I may as well buy A class. Well, now I think we're beginning to see actual, more realistic cap rates, a cap rate differential between the A, B, and C class. And so that being said, hey, if you can find a C class deal where the yield is worth the risk of buying that, then it can be a good opportunity. For me personally, though, I'm looking for, say B and A class properties. And I think now, with interest rates being as high as they are, my long-term view is interest rates are going to go down again. So I think hey, if you find a deal now, it pencils out for the type of returns that you're looking for. I think as long as you put the right type of debt on it, you'll be fine. But it's just a matter of finding the deals that pencil and putting the right type of debt on.
Oh, Awesome. So it all comes down to what are your yields, what when you underwrite, what particular pounds out in terms of return and the debt on top of that particular apartment.
Right. And, and there's no right or wrong
Okay.
class of apartments. I mean, some guys, they practice in the C class space. That's what they love. That's what they're primed to do. And they have teams that can manage that stuff. Hey, if that's what you do it. I mean, so, I can't say if it's just right or wrong, but just me personally, now I'm still buying, A and B class.
Yeah,
also,
B class.
Yeah. Also looking at ground up development now. So.
Okay. Awesome. Talking about ground up developments, what can you say about that in terms of getting into development, having done the aspect of value add, the aspect of all these classes we just mentioned, A, B, and C apartment value add, or practically performing assets like that. Ground up is another kind of a different scope entirely,
Yes.
know. So,
I like it, even though I'm just getting into it now. But and my investors have been asking me for a while for, different types of investments in real estate, like ground up development, where, it gives us maybe a longer hold, but a higher yield and also a lower risk. I mean, being that you're building at cost, if you do it right and you structure the deal right, that it is actually a lower risk investment than, say, buying an existing value add deal. Say, because we're actually building it at cost, and so there's always a spread between what the market price will be versus the cost. And of course, when you buy land and you develop the land, it automatically increases the value of the land.
Absolutely.
And so it just gives you a lot more control. And so that's why we're looking at those investments more closely now, because I think just with everything going on in the economy now, anything that you can do to de-risk or to add more control over your investment is just, a smart play. So.
Awesome. So in your several experiences of investing in income producing property, take us through if there's been, and that's if there's been any kind of a situation where you would say that, no, that particular journey with that particular deal was just what I would call your worst case scenario in terms of, in real estate, you have to think about the best case scenario, the most likely scenario, and the worst case scenario. Sometimes you find yourself at the end of a thing that, say, I just want to get rid of this deal. I don't want to be a part of it again. Have you had any kind of scenario that you say one particular day went south for you? You want to share that experience with us?
Well, I've been blessed in that I've always made money,
okay.
On an investment. So, I mean, for me to date, a tough investment has just been, okay, well, we didn't make as much money as we thought. Okay. Now, some folks will chalk that up to allow, well, you only invested in, an up cycle and all that, Okay, well, time will tell. I would say probably the toughest investment I've been in, I'm actually still in that deal now. And so, it's yet the complete story is not there yet. So I am holding that story until it's complete. But, as of now, let's say as far as tough things that have happened on deals. Well, one thing I can always say about real estate investing, okay, investing is war. That's how I approach it.
Okay.
Okay. So I always think, okay, nothing is going to be easy. Okay. And real estate, I always approach it from, hey, bad things are going to happen and you need to be prepared in case those bad things happen. I think that's part of what has allowed me to be as successful and have been in real estate for as long as I have. Okay. And of course, just, the grace and protection of God, and that, he's always watching my backside,
Oh, yes.
So, yes. But, man, I've had, I've had murders, I've had fires, I've had, flooding, I've had, it comes with this territory, which is why you mentally have to be ready for that going into a deal to know, okay, well, if this happens, we have insurance and this happens, so I think having that expectation and always thinking about having cash on reserve. I mean, a lot of times in real estate, what kills you is that you just run out of money. Yeah. But if you always have cash, then you can weather just about any storm. I think another thing I'm learning now is that it's cash and debt, the type of debt that you put on properties, even though, I've always known that, but it's just now you're getting a very practical now lesson. And a lot of us are learning just how important debt can be. And if you put the wrong debt on a deal, even though, it's very good operators out there that just may get caught in the wrong credit cycle. Guys that were great operators, but they just happen to have a loan. They happen to have a loan that matured during like the 2008 crisis when all the credit markets froze up. At that point, it didn't matter how good an operator you were. If you had a loan that was maturing and you got caught, hey, your property is going back to the bank, So it's certain things that you just cannot control, but still your debt piece is just, it's very important. I think we're learning that lesson, the hard way now. So.
Awesome. Wonderful story, thankful for being so successful all throughout your deals. Wonderful. That's a great story to actually, know that, yes, it's all been good, even having been known fully well that, you have to also put in the work also too, because that's what you rightly said right now, understanding the parameters, what comes with the territory, and being able to prepare for just an in-case situation, which makes it the difference maker when it comes to also to having a successful deal delivery. So what's your best advice for newbies that are still trying to get into this business?
Well, it depends on what they want to do. If they want to get into apartment syndication, then I would say, hey, you need to get around people that are doing what you want to do. Now, I don't mean a few people. I mean a large network, of folks that are doing what you want to do, and get engaged and learn from them. That's the most important thing. To take action. You can do it. It's just a matter of getting around the right groups of people that have that mindset, that have that experience, and you'll be amazed at just how much your mind will expand, simply being around people that are already doing it.
It's amazing what can happen with influence.
Yes.
Who you surround yourself with. And I always believe one thing ever since, that wherever you desire to go in life, just find somebody that has been there. And which means the circle that you surround yourself with, you find people that are already there or exactly doing something similar to that. Surround yourself with that people, which obviously talks about networking with the right sets of people that have done what you're trying to do so that you can gain knowledge and several experience, just that the Bible would always say in the multitude of counsel, there is safety. Also within the counsel or the confines of or the education of like-minded people or what you want to do, get into that circle, and they would obviously be willing to share what, just like James rightly said right now, be willing to share with you as a newbie in apartment syndication or whatever aspect of real estate you're trying to get into. Awesome. Lastly, before we round up today, I want to ask you, when we started about the fact that your dad, your father gave you a book, two books, one in the aspect of real estate. Now, we're talking about your dad being your father, your dad also with much experience. Your dad has gone ahead. He's seen a lot of the things that you've never seen before in terms of being the father, being the older one, the elder, the one that has gone ahead, that has more experience than you do. Now, in that same typical principle, what would you tell when you look back right now? What would you say to yourself, the younger self? What advice would you give to yourself as an entrepreneur that is younger in like 20 years? Like, typically it's just saying that, the younger ones coming now, what can you say to them? What can you give them as an advice as an entrepreneur?
I would say have a relationship with Jesus Christ.
Mm-hmm.
Number one. Dream big. Don't think small.
Yeah.
Make God a part of your dreams. And I mean, you would be amazed at what you can achieve in life. So it's pretty simple as far as I'm concerned. It's not hard to do. It's just that most people struggle, and of course I'm a Christian guy, so I can only give you my viewpoint, my secret. I mean, that's what it's been. I mean, I believed God when he told me who I am in the Bible, and he told me what I could do if I trusted in him and if I put my trust in him. And he told me I can do all things as long as it's within his will for my life. And so I never listened to people that told me I couldn't do this or that. I was never the smartest kid. I was never this or that. It doesn't matter. It never mattered. All that mattered is who God told me, and still tells me every day who I am. And so I continue to dream big, and I just believe God. And so, I go out and do it. I mean, just not having fear. Most people live their lives afraid. Most people live in perpetual fear every day. And I just chose not to live my life that way because God told me not to, that I didn't have to. And so that would be my words of advice to the younger me. If I would have learned that earlier, then I could have been so much further ahead. But finally I got it. But, I tell them, hey, don't be afraid. I mean, trust God, dream big.
Awesome. You've heard that, particularly the aspect of, number one, have a relationship with Jesus Christ. The scripture says that, seek ye first the kingdom of God and his righteousness, and all other things shall be added unto you. They just tapped it up in the nutshell like that. Have a relationship with Jesus, have a relationship with God. And ultimately, all other things will fall in place in terms of your dream, what God has called you to do. You can go the extra mile. Dream big. After all, the same dream that you have for small one, it's the same dream that you have, the same capacity for the large one. Why don't you just go right ahead and dream big? It's the same thing that you're going to have to pay. Why not pay for the same larger dream? Awesome. Those are great advice for the younger generation, the people that are coming behind ultimately to create legacy in the aspect of real estate. Jade, you've been such a ton of value today. Like I said, we started today with the amazing caption that, our lawyer acquired over 3,000 units of apartment in real estate syndication. Well, that particular man is Jade Laye and his team. They've done great things in the apartment industry. And I'm honored to have him here with us today to share his experience. I hope it's been a valuable experience to people out there that are listening to Commercial Property Club podcast. It's been a wonderful day today with Jade Laye. Well, if people want to get across and get in contact with you, how can they do that, Jade?
Sure. The easiest way to reach me is simply to email me at Jade, Jade.Laye, Laye, at layeinvestments with an S.com. Jade.Laye at layeinvestments.com.
Awesome. You've heard that, the easiest way to reach him is through the email. Please don't hesitate to email him. He's a good man. He's a man that is open. He has an open door policy, would readily share his experience also. He's a man that you can also trust with your capital investment also too. Awesome, Jade. Thank you for the value you had today. Thank you for joining us. Thank you, everybody, for joining the Commercial Property Club podcast today. Like we always said, we bring valuable knowledge, just like we always say. This is another day which we brought somebody experienced onto our show. We would always do that going forward also too. Thank you so much for joining me. My name once again is Ola Ibiwoye, host and founder of Commercial Property Club podcast. I will see you another time.